Hi everyone, so we're going to move on to equities, and over the past couple of days to weeks we started to look at the idea that this is still going to grind a little bit higher, but where you want to be is more rotation into emerging markets, etc., dollar sensitive areas of the market that are undervalued. That seems to be underway. An awful lot of people suggest that the S&P 500 needs to drop in that environment. I don't think it needs to drop. I just think it doesn't need to go too much higher. I think the capital needs to chase into emerging markets, and then we'll see it play out. So as well as that, we're expecting to see slight higher highs here on the dollar yen before a material drop. And if you guys remember from the currency update, both of these should correlate because of the carry trade and the nature of that carry trade. So we should see a little bit higher here to finish off a wave, bit of a pullback, and then we should see the final fifth wave up. I'm not chasing this market. The only place I would consider buying the S&P 500 is down here for that wave 4 around 2,500. In that environment, you have a full transition from the monetary standpoint with the Federal Reserve. They've already signaled it, just gone, that we either have an economic downturn and GDP starts to weaken, or there's a material drop in the stock market. One or the other has to occur, and that's been the case for a while, but it's important to know that in this circumstance, it's actually the economic data that's taken the lead. So for right now, I expect this to go higher. I'm not going to focus too much on it because I don't think there's much value here at all. So with that said, let's wait for either this full pattern to play out. If it's correct, I'm counting this as an ABC flat correction for a wave 2, which could be wrong. This could actually be the wave 2 here. This could be a wave 1, 2, 3, 4, and the 4 finishes here, and we're on our way up for the final fifth wave. It doesn't really matter whichever pattern you look at, because it still suggests that there's more upside to be had. So let's put the S&P 500 to one side. Let's see it grind higher. That's what we want to see, above 3,000. A grind higher above 3,000 would be perfect, while emerging markets start to rally and outperform the S&P 500. So looking at emerging markets next, I think we've seen that low. I think this was a flat correction, and I think we've seen that final fifth wave down for a C of 4. We rallied nicely up there. So far we've got a wave 1, 2, 3, flat correction of sorts here for a wave 4, right at overhead resistance. We break above this overhead resistance, it's extremely positive for emerging markets, and the expectation, of course, is $54. That's what my expectations are ultimately. I think when you look across the board from a value perspective, and valuations is a foolish way to measure market performance. The best way is liquidity, but if you look at dollar sensitive assets, it's mixed across the board, but certainly emerging markets and commodities look like they want to move higher. China will move higher in time, I've no doubt about that. Once the dollar starts to weaken, China will start to recover, and that could be sooner rather than later. So with emerging markets, still expect more upside pressure and a breakout of this overhead resistance rather soon. Moving on to China large cap, similar situation to what emerging markets are in, EEM. So I think this is some sort of flat correction here for wave 4. The final fifth wave is in. We're back up at overhead resistance. We need to push ahead of that. We don't have a beautiful trend line like we've had in emerging markets, but it's the same sort of chart pattern. 1, 2, 3, 4, get a final fifth wave in, back test, and we're off to the races. We're sitting at overhead resistance here, starting here. So we do need to see it push a little bit higher, but the structure is set that this is ready to move higher. I think there's going to be a transition now, and you'll start to see emerging markets and the lower priced economies based on the dollar, or from the negative feedback loop of the dollar, they'll start to outperform. And China is one place that I would play that. If the United States are going to start to challenge China, there is going to be transitory positive effects in China because of a weaker dollar. China want to be a more domestic demand-led economy, and the weaker dollar would certainly support that, because China's the renminbi would be a lot more valuable and they could consume a lot more goods. So that's what we should be expecting. That's what we should be looking for across the board, is for the dollar to weaken. It's the same story, just a different asset or a different instrument. The same story across the board. Let's get some perspective on Brazil. 5 waves up for wave 1, that's our expectation. There was 5 waves down after that. Nice RSI divergence, which suggested that this was a near-term low. That proved to be correct, and so far I think we're going to grind higher into this B wave. This B wave is 35% off the lows, and that reinforces my view that although this is corrective, I think there's going to be a transition into lower economies or lower priced economies due to a rising dollar. So at some point in the future the dollar may rise again, but right now I think the dollar is going to weaken, and it's going to have a positive feedback loop for Brazilian assets. And as I said, we're looking for 41.30. So far it's playing out perfectly. Let's see how it plays out big picture, but there's still an awful lot more upside in this trade to be had. So Brazil still looks great, and as well as that, you got the manufacturing PMI numbers coming out above 50, which is the growth level, which is very, very, very positive. So next we got Weibo, and Weibo, I put a chart into the Slack group yesterday about Weibo. So as you guys know, I own Weibo. I shouldn't be concerned about this. Right now, it should be very clear that my strategy in the current environment is 3.5 times ATR, stop loss is 63.37, and my expectations is this is going to move higher. When we move in and look at the lower time frames, this is what worried me was 5 waves up here for a wave 1. That was my expectation. And then 3 waves down for a wave 2. And then you have 5 waves up here. This could also be an ABC of equal proportion. If that's the case, you do not want to see price go below here. So this is my sort of line in the sand. Even though I have a stop loss down here, this is my line in the sand, and I need to start making a decision here. Am I going to keep this or not? We may not even get there. As you can see, we got an A, a B, and a C potentially for a 1, 2, 1, 2, 3, 4, 5, 4, 5. That's my ideal outcome here, but I have to be real with this trade and not get too carried away. As I said, I do think that dollar sensitive assets across the board are ready to rally. If you look at large cap China, if you look at emerging markets, they both suggest that they're ready to move higher, and that could be a subtle sign that suggests that this is a 1-2-1-2. 1-2-1-2 patterns are typically aggressive to the upside. Just like this has been aggressive on the downside. This was down about 50% since earlier this year. In the grand scheme of things, this here could be the start of wave 3, 4, 5 for a wave 1. For that move that we're expecting above this prior high of 140. So this could all be absolutely normal, but I have to recognize the structure, and I have to start thinking about it in very logical terms, but in a real way. I don't want to close a position too early, which often happens no matter how often you do it. I closed Whiting Petroleum. I should have held on to that. It happens, and it will continue to happen into the future because this is a game of emotion, and emotions always get the better of us. So with Weibo, as I said, I think this could start to push higher now, because into the close, after I sent out those charts into the Slack group, it started to recover a little bit. So we'll see what happens early next week. But if this is a 1-2-1-2 pattern, we should see early next week that this, maybe it drops one more lower low, but it does not go lower than this level here, and then it ultimately starts to push higher. So we're running out of time for that view. So early next week I'll be able to give a definitive answer on what my expectations are for Weibo, but ultimately I'm still confident in the view that it's going to move higher, and that dollar sensitive assets are ready to reverse higher. In truth, it could have already reversed higher. This could already be the reversal. So Weibo, I'm not too worried about it. I'm just recognizing what's on the chart in front of me, and I want to be honest with myself and make appropriate decisions based on the data that's in front of me. So next, moving on to another Chinese company that I own, which is Alibaba. So as you can see, I think this is 5 waves up. The structure itself, starting down here, still has a higher high to go. That's the big picture structure. We've still got a higher high to go. Completed out of wave 3, 4, 5 for wave 3, and this should be some sort of corrective pattern right into the 38.2% Fibonacci, which is a perfect retracement. Right now we're hitting up against overhead resistance. Of course, we should expect that this is not going to break that easy. Once it breaks, we should backtest and we're off to the races. I'm very comfortable owning companies like Alibaba. These are a huge company, and the compounded annual growth rate in specific parts of their business has been growing at 60% per year. This is a $420 billion company, and compounded growth rates of 60% is absolutely phenomenal. It's far higher than Amazon, and Amazon has a current market cap of roughly $1 trillion. So if you want to look like for like in terms of revenue and growth and expectation for growing strategies into the future, Alibaba is probably a better play than Amazon. So as I said, we should expect that this is going to be weak. We broke down, but if we get ahead here, and I do think that's the case, if we get ahead of this overhead resistance, that would be a false breakdown, and we should start to push higher, probably aggressively. That would be confirmation that the dollar's rolling over. And if you think about the euro dollar chart, maybe that gives a little bit more of a view of what we should expect. Maybe a little bit more downside before we push straight to the upside. That would be ideally what I would like to see. Until we get above there, the risk is still that we push a little bit lower. My average cost 172, slightly below it right now. Not too worried about it. As I said, we have to be very much agnostic to what's happening in the near term and focus on our expectations, big picture. And this is not a day trade, it's not a week trade, it's a 6 to 9 month trade, maybe even a 12-month trade. And if at the end of 12 months we've got 20 to 30% return on this, that was a fantastic trade. But understand, it might go nowhere for 2 to 3 months, because at the end of the day there's only volatility in the stock price about 20% of the time. So the other 80% of the time it's not really going anywhere. It all happens pretty much inside 20% of the time. When you have a time horizon as we do, 6 to 9 months into the future, you just ignore this near term. And so as I said, my expectations are this is going to push higher. It will ultimately make a new high above 211, and I think it's going to go closer to 250. That's based on the Elliott wave expectation that this final fifth wave is not in yet, and we should push higher. If I'm wrong on that, this was all 5 waves down for an A, and we've still got to get up here for a B, up to 195, 198. We will know beforehand, because we will have indication based on what the dollar and monetary policy is doing, and the trade war, of course. So that's what we should be focusing on moving forward. So big picture, Alamos looks fantastic. Really strong RSI divergence. It's performing rather well. We got in a 418. I think there's going to be maybe a headwind around 512, and there is still a couple of shadows that are casted over my view with precious metals in terms of silver and gold. These guys could actually make one more lower low, as if you guys have looked into the commodities update, you guys would have seen that. If that is the case, well, Alamos Gold is probably going to see some sort of upside resistance around 512, and that would make for an A, a B, and a C wave. That would still give us 22%, which is fantastic. Go and ask your local branch manager for 22% on a savings account in just a couple of weeks, and the probability of that's next to zero. So don't worry about if we have to take it off near term. 22% is a massive return for the duration that we held it for. My view is that ultimately the dollar is going to break down in a big way, and of course gold is going to be a positive beneficiary of that. Some gold miners are going to front run that move. Maybe Alamos is that, because I do think there is the potential that this is a long-term low that we've already seen. My stop loss is 342, so it's over $1 below where we are. So there should be absolutely no worries about Alamos, even if we dip below our entry level, if we decide to hold once we get up here. Let's just wait and see what happens at 512, likely next week or the week after. It's going to happen rather quickly, and from there we can make a decision. If we burst right through there, it's likely that this is a wave 3 and not a wave C. So what's going to give us the first indication is the length of this wave. If this wave is 1.618 times the length of wave 1, we can assume that it's a wave 3 and not a wave C, and it's going to continue pushing higher. So next on to Dow DuPont, and Dow DuPont is a stock I want to own, but the timing is definitely off. So as you guys know, in the Slack group I posted, and we were sitting right on my stop loss. We closed below my stop loss, so I have to respect my risk management, and that position was closed. I still believe that this is going to push higher. I certainly have egg on my face last week because it started to push higher, and it definitely had the makings of that final fifth wave beginning, and then literally right after I put that in there, it broke right down, hit my stop loss. I got closed out of this position. All of my positions are 3.5 times ATR. They're small positions, so I hope you guys are managing your risk effectively and you're keeping those stop losses wide to keep you in the game and of course mitigate massive losses. With this, I'm still looking to buy this. We had 3 waves down here for wave A. I thought that was 3 waves down here for an ABC into the 38.2% Fibonacci, which came roughly around that 62 area. That proved to be incorrect. This was a B wave, and now we're breaking down for a C wave. The 50% Fibonacci of this entire move, as you can see, it starts here at the bottom of wave 2, goes up to the top of wave 3. The 50% Fibonacci looks like a perfect area for a wave 4 to end on this chart. Now it'll be an A, B, and a C. So that's where I'm aiming to get in next, is around 58. Persistence is always a great strategy, right? As long as you understand the price volatility that we're going to exceed, persistence is absolutely fine. I would definitely encourage being persistent on a company like Dow DuPont. The lower it goes, the more valuable I think it becomes, because the dollar ultimately is going to roll over at some point in the future. It's all about timing. A little bit surprised to see this breakdown as it is. I'll have to look a little bit more into the company, but for right now, this looks like an ABC, ABC, or WXY for B, and then 1, 2 should be wave 3, 4, 5, 5 down for a wave C. This wave here gives me very strong conviction that this is a C wave, because it broke down in 3. So Dow DuPont, guys, for the moment, I got stopped out on it. So I'm going to take these levels off because they don't matter anymore. And I'm going to be focusing on that 58.71 area. Unilever, still in an ascending triangle. Until this breaks down, I would, if you guys are in this, I would respect your stop loss and your positioning on your stop losses. But my view is this is going to break to the upside ultimately. I could be wrong. I thought Dow DuPont was too. This is not a company that I have a position in, but I do think the wave structure is complete here for wave 4. I could absolutely be wrong because this is very sloppy to the upside. I'm not sure. My view is that this is still going to push higher. The thing about growth is it's almost lagging when we actually get the details on it or the information on it. The ISM is a leading indicator for what's to come in the future. Inflation is a lagging indicator. It's only in the inflation numbers that we understand that the margin expansion that a lot of these companies have had. So we're only starting to see that start to pick up right now. Everyone's talking about soft inflation. That's what Jerome Powell says. Soft inflation. What Jerome Powell doesn't realize is we've got transitory effects because of commodities. Commodities were weak for a period. That's why we've got soft inflation in the current period. Now we're starting to see commodities rise. As commodities rise, you see the transitory effects of weaker inflation wear off. And that's why I say when we have a secular trend change in inflation, it doesn't mean that happens in perpetuity. It means that it happens and you're going to see disinflation or deflationary environments throughout that period. Unilever is a company I like, ascending triangle. Let's see what happens. These typically break to the upside, but do respect your risk management. Moving on to Whiting Peat, for those of you that remained in it, I have to assume that this is the same as the oil price, and we're in a wave 3, 4, and 5. We're on our way up to that target of $68. That's my expectation. We broke out of this wedge, dropped back down. It was in this drop here that the emotions kick in, and sometimes, and this is why I'm always reluctant to close out a position too soon, because if I had stuck to my risk management here, yes, I would have got stopped out and I would have lost probably a lot more than what I did. I was down a couple of basis points from my entry, but if I got stopped out on this position from my stop loss, I would have lost a lot more. But that's the risk you take the minute you put it on in order to make the return, right? So if I had stuck to my risk management, this position would be paying a lot of money right now. And that's why it's so important to really believe in the whole strategy that we're doing. Sometimes you're going to falter, just like I did. It happens. But we have to, for the most part, stick to it. With Weibo right now, that's why I'm going to be reluctant to sell out on that dotted line, which I've marked out. I'm going to be reluctant to sell out Weibo, as we spoke about earlier, on that dotted line, is because for this very reason. Because if I sell it out on an emotional decision and it starts to push higher, I've missed out on fantastic returns. And this happens time and time again. The market will punish you for not following your strategy, and that's what Whiting Peat's doing right now. It's punishing me, certainly, for not having the patience to sit tight. It's all about patience. I would be getting paid right now to do nothing in this trade, but unfortunately, I'm not. So the view is that this is going to continue pushing higher to 67. For those of you that are still in it, excellent. I think you guys are going to make good returns. So next we got SQM. Expectations are that this was the wave 4. The low was in 1-to-1 A and C. Now I think on a lower time frame, I think a wave 1 is in. If we go into the 1 hour chart, as you can see, that little rally that we've seen is a wave 1, 2, 3, 4, 5. With 5 waves up, for wave 1, that's my expectation, we have an impulsive wave. So not only on the big time frames for the wave 4 do we have A and C of equal proportion, now we have on lower time frames an impulsive move out of there. From there we should expect a pullback of A, B, C. So far I think this could be an A, a B and a C. This is a very shallow B, so just be careful of that because it only comes down to the 50% Fibonacci. Typically for a wave 2 we'd like it at least down to the 61.8% Fibonacci, so down to 43.97, which could be 1.382 times the length of this wave A. I'm certainly stalking this for an opportunity to buy. It's given me every single indication that SQM is now starting its final 5th wave, and there's probably 40 to 50% upside from here, which is a fantastic return. So I'm stalking this over the next couple of days. This is the 1 hour chart, and I would hope that this starts to break down enough to get me in the position. If it doesn't hit our target, that's fine. We followed the strategy and we'll just have to wait for the next opportunity. It happens. So SQM is looking fantastic, and I think it should be on everybody's radar right now as a high probability outcome based on the chart perspective, a macro top-down view in terms of battery technology and what lithium can do for that, and as well as that the inflationary picture. There's just so much positive for a company like SQM right now, so it should be on everybody's radar. And when you get the price structure that we have right now, it almost feels like free money, and I hate saying that because every time that I start to feel like that, it turns out to be a rotten egg. So let's see how it plays out. I'm looking to buy this preferably just below 44, but let's see where we can see a low. If it comes down and we start to rally off it, I'll probably buy into strength, which is still fine also. I'll notify all you guys as I make that decision. Another idea that I put out here is FedEx. FedEx is an idea that Andy put up. I'm not going to talk about this too much right now because I think we need to drop a little bit further for this wave 2. Once we get that wave 2 in, I think we're off to the races. If we don't get the wave 2, we're probably going to break out, and you can buy the breakout. This is a perfect play on inflation. And as I pointed out from the blog post that I put up on the website, I think FedEx is the perfect example of a stock that the market might misperceive. The reason being is because, yes, we're seeing wage inflation, which is causing a drag on their profits because the wage cost for trucking is going through the roof. However, the market is rallying not on a stagflationary environment. In other words, it's not just inflation. There is underlying demand for these goods and services. So I do think we're going to start to see that transferred over to the consumer. Once it's transferred over to consumer, the net profit or the profit margins start to expand again. FedEx should push higher. I do see this in 5 waves of 5 waves of 5 waves up. There's good upside up here, and this is a solid company that everybody knows. The liquidity on the balance sheet is solid. The quick and current ratios are around 1.3 respectively, which suggests that they've got short and long-term cash to satisfy any needs that they have in the near term. So FedEx, guys, if we can get low enough, go check out that chart. I've got specific targets, but we've still got a little bit lower to go before I would consider this as a buying opportunity. But I do think it's probably a good high probability idea, and if it plays out as I expect from a chart perspective and starts to push higher, it is a position that I'd like to take. My book is rather light right now. I've got a couple of positions. I typically hold 20 positions. At the moment, I'm pretty light. I've got a very light position. I've got a lot of capital that could be put to work, and I'm looking for companies like FedEx, like SQM, that have that high probability outcome, as well as I'm looking at the euro dollar. That could be another opportunity to diversify the same team in a different asset. So that is how I'll be playing the whole team. And as I said, I've got a lot of cash on the sidelines that needs to find a home. And the final chart that I want to look at today is Cameco. And I want to look at Cameco because I'm delighted to see that an awful lot of you guys have taken influence from the idea that uranium is going to be a massive bull market. I think this is probably going to be an investment theme that you're never going to see again in your life play out. This is extremely unique to be in the situation we are with uranium. And as Don posted into the Slack group, when you look at the stages of a bubble, we're still in the stealth phase. What's going to get us from stealth to awareness is a company like Cameco up 100%. You need to see the leaders leading the market. And then once the leaders start leading the market, the general investing public, they start to take notice, and then they start digging deeper and buying into junior miners. It's at that point you need to be very, very, very careful, because you'll start to see junior miners pop up everywhere with the liquidity. Most of those companies are going to be frauds, and so I'd stick to what we know right now. What I know for sure is there's about 50 companies in the uranium space, and of those, the majority of them are pretty solid. And the reason I say that is because this market's gone through a very, very aggressive bear market. After a bear market, one thing happens every single time, and that's cleansing of the balance sheet. These companies are in uranium and they've got solid assets, the majority of them, and there should be no subjectivity as to the prospects into the future. When we get 2 to 3 years into the future, you're going to see IPOs, new listings. You're going to start to see new juniors pop up with this fantastic property X, Y, and Z. And that's when you need to be very careful. I tend to gravitate towards the bigger caps. It provides liquidity, and I still think you can make an awful lot of money in those too. When I look at Cameco, I think we've seen a wave 1, 2, and then we're in a 1, 2, 1, 2, and this is a wave 3 within wave 3. So this next move should bring us up to about $17, pull back from there, and then we should finish off wave 3 about $20. After that, we get our pullback for wave 4, and then we're up to 25, 26. It's around here, this move from wave 4 to wave 5, after a massive move already, that I think we transition from stealth phase to awareness phase. Investors are typically lazy, and they typically chase capital. And you'll see from the early indications from the Commitment of Traders reports, the video that I done, large leverage funds are typically always trending towards the wrong side of the boat. And it's the same case for new bull markets. Cameco is definitely going to be a leader initially, I believe so. There are companies that are already above them. The reason there are companies that are already outperforming is because of the tax decision. Now, that's behind us. We popped 16 to 18% the other day, and I suspect we're going to see some follow through based on that as well. Once we get above this resistance line, I think this is off to the races. This resistance line goes back to 2011. So once we break out here, this will be fantastic. Do understand though, although I'm looking at the chart near term, this really does not matter. Our expectations are that this is going to $250 to $300 5 to 7 years from now. Right? It's not about this year, it's not about next year, it's not even about the year after that. It's about 5 to 7 years into the future, and you shouldn't worry about it. If you got the patience and the perseverance to sit through this bull market that is inevitable, and I think it's already starting, you will be rewarded handsomely, because I think these charts can rally, as I said, 20 to 25 times higher than where we are right now. With that said, guys, I'm going to leave it there. If you guys have any questions, please do reach out. I'd be delighted to hear from you guys, and have a wonderful day. All the very best, guys. And if you have any ideas, just like Andy's idea with FedEx, please do reach out and share it with the group, and I'll give my view, and others can give their view, and together collectively we can break down the best ideas. So with that said, guys, have a wonderful day. All the very best, and I'll talk to you guys soon.